Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I want to give you some end-of-month comments for today, February the 28th. It's a Monday, and presently, looking at the broad market, you do have a bit of a bid in crude oil. Realize it was rather firm Friday, only to give it all back and actually close lower on the day. So continuing spinning wheels over there. Realize crude spreads are not bid, so that's not particularly friendly in my mind. Equity markets are firm again. We were lower last night with pressure out of Asia. And what do you know, by the time cash open comes around, S&P's unchanged, and here come the buyers. So we're back up to 1950, big trading going on around that area. Gold market modestly higher, livestock's mixed, and moving on to the grains, I'm sorry, there's just not a lot of story. When you look at corn, we were up $0.015 too last night. Unfortunately, it seems that whenever the commitment of traders comes out on the Friday, you have a little bit of a bid on Sunday, and it materializes into nothing. So right now, corn's off about $0.015. May contract top step now that we are into delivery for the March. Spinning wheels go round and round. There's just not a lot for corn. The wheat market was actually up 3.5, 4 when it's revealed that the short side of the market's up to about 135,000 in the Chicago and also large in Kansas City. But once more, market gives it back on the open. All things considered, we've got tight ranges here today and nothing's going on. Soybeans have gone down to that 60, 63 area in the May contract. No real follow through, but no rotation higher either. And the meal market just cannot find a friend. Every day you turn around, it's either meal or wheat or cotton making new contract lows. So that's kind of says it all right there. As we get closer into March, you've got to start to ask yourself what weather premium is built into corn, wheat, and soybeans at these levels. I tend to think it's pretty limited. You're also seeing, unbelievably low volatility in the option market. So you got to keep your eye on those things. With Dees corn right around $3.80, I think the $4 call is about 20 cents. We just have to be open to the concept of once we get into March and we start to trade a little bit of weather, is there anything that can flare up that can give us a bit of that bid for weather concerns? If that doesn't happen, it's going to be a grueling trade for the grains, because at this moment, fundamentals are not changing. The only friend to any of these markets is the size of the speculative short position. And what's interesting is when those rallies come, they tend to die on the vine and we drift straight back lower. So for now, no real fundamental developments. Exports are, in my mind, still pretty mediocre until we start to see wheat and corn with big numbers on a weekly basis. It's just a little bit hard to get excited about demand. So keep your eye on early first week of March into the second week of March as we start watching the weather models. For now, corn and wheat are just sitting. Not much premium, like I said. Beans, we're testing the low side of the range, but in my mind, it's important that we get a bid out of here. Right now, you got a little bid in meal because oil's coming off a little. If soybean meal can have a couple of days of upside, maybe the beans are able to retrace, get back up to the 70, mid-70 area, but really, you're just pleading for something to happen in the grains right now. Just nothing there. So if you've got any questions, again, this is Kyle with International Futures Group in Chicago. Don't hesitate to give us a call. Thanks.